Every time you listen to AI, you've surely heard of Palantir and his expressive CEO, Alex Kopp.
Weren't there? Great, be my guest. But then the numbers are there. So then you're not. It's not even clear he's actually shorting us. It's probably just how do I get my position out and not look like a fool.
My lawyers call me 80 times before this call to tell me that I can't talk about the relationship between the quality of the air and our share price. I can't talk about how much I love my parents. I dare not mention that I wrote a PhD. I must not laugh at certain jokes, and I must avoid anything that would sound optimistic about our business. Let alone, God help me, if I say any of my personal views. That I don't like.
In this video, I'll try to explain their beginnings, core business, and concerns about valuations. The seed for Palantir was planted in the aftermath of September 11 terrorist attacks. At the time, Peter Thiel was running PayPal, which was losing millions of dollars to credit card frauds. To combat this, PayPal engineers developed an advanced pattern recognition algorithm to sift through massive amount of transactions data and identify suspicious behavior. After eBay acquired PayPal in 2002, Thiel began to wonder if the same data integration and pattern recognition concepts used to track fraudsters could be applied to track terrorists. The thought at the time was that the US intelligence community had the intel that could have potentially prevented 9/11, but it was siloed across different agencies with incompatible systems. Thiel's vision was to create a software platform that could connect these disparate databases, helping intelligence analysts connecting the dots, while theoretically building in privacy protections to preserve civil liberties. A resemblance to the Coca-Cola formula. The way it is preserved even today is by mixing the components in a variety of institutions to avoid spoiling the secret. Their plan was to connect this to the federal government. That gave rise to the founding team. Palantir officially was incorporated in May 2003. The original creators were Peter Thiel, the financial baker and visionary. He provided $30 million of his personal net worth in initial seed money, which allowed the company to build without immediate pressures from outside investors. Alex Kopp, a fascinating choice for CEO. Kopp was Thiel's former classmate at Stanford Law School and held a PhD in neoclassical social theory from the University of Frankfurt. Albeit he had no engineering background nor finance, Thiel believed that his deep understanding of philosophy, ethics, and risk made him the perfect leader for a company handling highly classified government data. Among the others were Nathan Gettings, a former PayPal engineer who helped build the original fraud detection system, and Stephen Hohen and Joe Lonsley, two brilliant computer science students from Stanford University who were brought in to build the actual prototype. They brought together a mix of Silicon Valley engineering, legal philosophy, and significant capital, forming a great foundation to Palantir's structure. Since the very beginning, the corporation went through terrible bureaucratic processes. In its early days, Palantir struggled significantly to find outside traction. Traditional Silicon Valley venture capitalists refused to invest into them. At the time, selling expensive custom enterprise software to the government was considered a terrible business model, and defense tech was highly unpopular in the valley. The turning point came in 2005 from an unlikely source. In-Q-Tel, the venture capital arm of the Central Intelligence Agency, also known as the CIA. In-Q-Tel invested a relatively small sum amount of $2 million, but it was not the wherewithal. It was the credibility they were looking for that this provided. It opened doors in Washington, D.C. and gave Palantir's developers direct access to the actual intelligence analysts who would be using the software, allowing them to iterate and improve the product based on real-world needs. By working closely with the intelligence community, the company developed its flagship platform, Palantir Gotham, released in 2008. Before Gotham, agencies like the CIA and the FBI kept their data in separate, disconnected systems. As I said before, an analyst looking for a suspect would have to search each database individually. Gotham was designed to integrate all of this structured and unstructured information, such as phone records, bank statements, airline tickets, and informant reports, into a single, unified visual web. Researchers could use the platform to uncover hidden relationships and trace the network of terrorist organizations or financial criminals. By 2010, the platform was heavily relied upon by defense intelligence communities, and Palantir began supplying this software directly to military platoons in Afghanistan to help predict the locations of improvised explosive devices. But remember, this is a software company, not a hardware owner. Palantir builds enterprise software platforms that connect and analyze massive amounts of intel so organizations can make better operational decisions. Among their products, they got Gotham, which is used mainly for intelligence, threat detection, and mission planning. Foundry, which was designed for commercial enterprises to unify and analyze investment data. And AIP, Artificial Intelligence Platform, which is information analyzed by AI. At its core, Palantir's technology turns disparate, gathered facts into a unified operational picture. Its software is used from everything, since intelligence analysis to optimizing global supply chain. They literally sell the Excel and Word for governments and businesses. Palantir raised a total of approximately $3 billion in private capital before hitting the public market. In their last round, they have raised an astonishing amount of $900 million, and their debut was not a traditional initial public offering IPO route. Instead, the company opted for a direct listing. This means that they did not issue any new shares to raise capital or use underwriters to set a price. Instead, existing shareholders, such as the founders, employees, and early investors, were simply allowed to start selling their shares directly on the open market. Under the stock ticker PLTR, Palantir went public on September 30 of 2020. The reference price was $7.25 a share, albeit this was just a baseline set by the exchange, not an actual trading price. Their first trade was at $10 a share, and they closed the day at $9.5 a share. Based on those opening trades, the company was valued at roughly $70 million, though fully diluted valuations, which means that we account for stock options and restricted shares, put the figure closer to $21 billion. Today, the market capitalization of Palantir is $360 billion. More than 15 times return in 6 years. At the time of their listing, they were able to generate $750 million in revenue. And for the fiscal year of 2020, the firm was expected to generate $1.1 billion. So that would make Palantir at its first valuation 20 times revenue. Although the business has never turned a profit in its 17-year history. In 2019, the company even reported an approximately loss of $600 million. Despite its massive valuation, Palantir has a surprisingly small, highly concentrated customer base. They had only 125 customers, and the US government and a handful of massive commercial enterprises were making up the bulk of the revenue. Let's now focus towards valuation. Their 2028 PE is 52 times. Yes, 2028, because of course the only thing that matters when value businesses is the future. That is why a 400 P ratio tells you almost nothing about a company. But even 3 years ahead, the company seems to be getting high multiples, which means that they are relying on massive growth and future cash flows beyond 2030. In the end, valuation is about 10 years forward or even perpetuity. But I need to remind that maybe investors are not pushing enough for a margin of safety, meaning that as soon as the company suffers a deterioration, and I'm not talking about a loss, but rather growing instead of a 60%, which is expected, to a still impressive 30%, there might not be bottom for the share price. We're still not sure whether Palantir will be the only AI software company, and valuations today are pretty much reflecting perfection. And the key is that even though shorting is tremendously dangerous and maybe profitable, the important thing to remind is that the business, Palantir, is a magnificent company with astonishing returns on capital employed and a tremendous growth rate that seems unstoppable. And time in the end is the ally of a wonderful business. So this aggression between price and value may cloud, but every day that passes, Palantir intrinsic value, although of course starting from scratch in comparison, is building up at a huge pace. It's like running a 1 mile race, started from the middle, but against a sprinter. Just to go over a few numbers. They only became profitable in 2023, closing that year with almost $100 million in income, and for 2025 they already multiplied that by 14 times, leaving them with $1.4 billion for the entire fiscal year. The revenue has been growing more than 50% year over year. The EPS expected to go up 70% this year, 40% the next one, and 50% for the next 5 years, meaning that they're doubling every year and a half with an implied EPS of 30 for 3036. Returns over capital are all over 20%, and free cash flow margins are close to 50%. That implies that for $1 in revenue, they collect half in cash earnings after capex. Of course, I'm leaving stock-based compensation out. Recall that markets can remain irrational more than you can remain solvent. So even though Palantir's valuation is objectively high, the company is doing terrible with high growth and high margins. So you must be careful. Well, that's it for today. I appreciate you watching the entire video. If you like it, subscribe and hit the like button. If you did not enjoy it, please tell me in the comments why so I could fix it for the upcoming videos. My name is Fausto Catalano and I'll see you soon.